I'm Matt Bishar with NAREIT.com here in New York City for REITWeek 2015, NAREIT's Investor Forum. I'm joined today by the executive team from American Residential Properties, Stephen Schmitz, Chairman and CEO, and Laurie Hawkes, President and COO. Thank you both for joining us.
Good to be here.
Now, like many companies in the single-family rental space, American Residential concentrated on expanding its portfolio through acquisitions early on. Is that still where you see the most strategic value coming from, or are you looking at another driver?
It's a great question, man, and as you know, we were one of the first in the space as pioneers, and what we're working on now is we've slowed the growth, and what we want to do is show the world that what a stabilized portfolio looks like. So what we're focused on is driving occupancy, driving rent increases, and managing costs downward to show that this is a real business that works in a REIT that can generate a real exciting return for our investors.
And where are you seeing the strongest returns from a geographic perspective? And are there any markets that are surprising either on the upside or downside?
You know, it's shifting. It's literally rolling throughout the United States. Not all markets crashed at the same time and not all recovered at the same time. So our initial investments, as you know, were in the Southwest and predominantly the Sand States, and that included California, Phoenix, and Nevada. And those now are upwards of 97 and 98% occupancy. The newer states for us include the Southeast, which includes Atlanta, Nashville, as well as Florida, and of course we still love Texas. So those markets are, if you will, newer for the SFR investors. The occupancies are still on their way up. The opportunity is still there, and there haven't been surprises. As I said, it's really one that's more of a recovery. And Texas in particular didn't have the same boom and bust as the other Sand States did. And so we find that that's just steady growth relative to our rent increases that Steve mentioned. But we think there's a vast amount of opportunity out there. The capital still needs to come, but the opportunity is absolutely there.
And lastly, as you mentioned, your company obviously a pioneer in this space, but it's still relatively new. As it flushes itself out, what do you think are going to be the key differentiators among the winners and losers? And is this a sector where we'll have to see eventual consolidation?
Well, I think operators, for sure, will distinguish themselves because unlike a lot of REITs that are focused more on acquisition and finance, in our business, it's an operating business. And we knew that going in, and we thought that could be one of our strengths, and we really built the company around that. And we think that'll be the big differentiator because, again, the asset size is so small, it's a business of pennies, and you have to be able to manage those pennies and collect all the pennies, and you multiply them by 10, 20, 40,000 houses, it adds up to a lot of dollars, and that's how we think we can generate return to shareholders.
And it's not simply the mechanics of operating the properties, it's also one where we're going to focus more on resident service. Resident retention matters. We believe it's stickier than multifamily. The turnover is lower. We're looking at turnover, which is really around 27% versus multifamily at 55%. And a focus on the resident as the customer, the consumer of goods, and the longer you can keep them in the house, the more the margins and the profitability will be produced in the SFR space.
Laurie and Steve, thank you so much.
Thank you for having us.
For more on this and other REIT news and analysis, be sure to visit REIT.com.